Asian shares dipped on Monday on fears of more protectionist measures from the United States, while the dollar declined against major currencies after U.S. President Donald Trump criticized the Federal Reserve's tightening policy. Trump, on Friday, lamented the recent strength of the U.S. dollar and accused the European Union and China of manipulating their currencies. Sponsored the dollar index, DXY, is so far up 2.4% this year, led largely by Fed rate rises, strong macroeconomic data and nervousness about a full-blown tariff war. Was last down 0.2% at 94.27, the lowest in more than 2 weeks. Trump's remarks on Friday, coupled with new threats to slap duties on all U.S. imports from China, triggered sell-offs in Wall Street and European stocks on Friday, despite good corporate earnings. NL1N1UG076 Asian stocks took Wall Street's cue on Monday, with MSCI's broadest index of Asia-Pacific shares outside Japan, MIAPJ0000PUS, falling 0.2%. Japan's Nikkei and 225 stumbled 1.4%. Australian shares and South Korea's Kospi Index, KS11, fell 0.9% each. Chinese shares also opened lower but quickly reversed their losses, with both the blue-chip index, CSI 300, and Shanghai's SSE Composite, SSEC, up a touch. Although U.S. equities edged lower on Friday and the yen strengthened, most cross-asset moves are supportive of APAC equities, particularly dollar weakness, strength in emerging markets FX, and a dramatic bear steepening of global yield curves. Commodities are also mostly trading higher, analysts at J.P. Morgan said in a note to clients. Trump's comments against Fed rate hikes helped steepen the Treasury yield curve. Also playing a role in the global tick-up in yields was a Reuters report that the Bank of Japan was in unusually active discussions to modify its massive easing program. NL4N1UG30J. The BOJ, in turn, offered to buy an unlimited amount of 5 to 10-year Japanese government bonds on Monday. NL4N1PS23K, benchmark 10-year JGB futures to JGBV1, which had started lower on Monday, paired some of their losses on the announcement. The Reuters report and the dollar's weakness together added to the yen's strength. JPY equals, which was last up 0.5% at 110.91 per dollar. Trade tensions remain a risk, but with an extended period until implementation for the tariffs and the next round of escalation, APAC equities are unlikely to respond much to Trump repeating threats already known. J.P. Morgan added. Investors are now looking ahead to an important meeting between Trump and European Commission President Jean-Claude Juncker. Trade tensions are likely to remain in the headlines as Juncker meets President Trump in Washington to discuss potential U.S. tariffs on European autos. Asset manager Insight Investment, which is owned by BNY Mellon, said in a note. It's probably a little too early for the indirect impact of the U.S.-China trade issue to be showing up in the data. Nonetheless, the trade numbers that were released for Singapore and Japan were worse than expected. In Singapore, for example, exports rose 1.1% in the year to June compared with expectations of a 7.6% increase, while electronic exports slipped 7.9%. NL4N1U900W. Elsewhere, the euro equals EBS climbed for a third straight day, to a 2-week top of $1.1746. It was last up 0.1% at $1.1741. In commodities, oil prices were held back by concerns over U.S.-China trade tensions and increased supply. U.S. Crude CLC-V1 was last off 16 cents at $68.10 a barrel after posting its third straight weekly loss. Brent LCOC-V1 eased 17 cents to $72.90. Spot gold was barely changed at $1,231.80 an ounce. Zhao equals. Reporting by Swati Pandey, editing by Eric